All right. Well, thank you everybody for joining us today. I'm really excited to speak to you about reducing risk, leveraging integrated construction management platforms with ERPs. I think this is going to be a really interesting conversation about how we bring together best-in-class solutions to increase transparency, reduce risk, and let's be honest, just make cost management on projects a little bit easier. So my name is Chris Langiza. I am the VP of Global Partnerships and Alliances at Procore. And I think I have one of the most fun jobs because I get to work with all of our partners, including our marketplace partners and also all of our consulting partners as well. And I spent about 15 years in the construction industry. So a lot of the things we're going to talk about today are super relevant and super close to home for me because as I ran projects in the past, I know how hard it is to make sure that you have accurate costing on projects and to make sure that you eliminate the possibility for risk at the end of the project. We don't want to have project cost overruns. So I'm also joined today by David Luker, who is a director of risk consulting at RSM. I'm going to let him introduce himself very quickly.
Hey, thanks, Chris. I appreciate that, man. Yep, director at RSM. I've been in public accounting for 16 years. I'm a certified public accountant, and my background is audit and tax for construction companies. And then about 10 years ago, I moved over to the advisory side of public accounting, where I've worked in project controls and program controls, internal audit, and I actually do a pretty good bit of forensic investigation work and claims work as well. So I kind of have a unique perspective as an accountant, maybe a reformed accountant, we might call it. I'm far more interested in the operational sides of the business, but I can't get away from the debits and credits. So I appreciate you having me on, Chris, and I appreciate your friendship over the years and look forward to sharing some of the things that I've seen and how they relate to this concept of integrating financials.
Yeah, absolutely. Thanks, David. And I want to start off by talking a little bit about, just construction in general, right? Many of you have seen this slide before. Construction is so incredibly complex, right? That's not news to anyone here. But what makes it so complex is how unique it is and how many stakeholders there really are on projects, and that everyone is really in different places working on different tasks and not necessarily seeing the same information that they need to. And, we've all heard it before. The only constant in construction is change, right? Things are constantly changing. Drawings are changing, scopes are changing, contractors are changing. The people that are working on the project are changing. So this is some of the things that make it so incredibly complex to run a project. And all of these things also contribute highly to whether or not projects get finished on time and on budget, which is what introduces risk. So, large projects across all kinds of different asset classes typically take about 20% longer to finish, and they're usually about 80% of them are over budget. Now, none of us want to be in that situation, right? The goal for all of us is to deliver projects on time and on budget. But if there are going to be those changes, and budgets are going to be increased, we want to know about it absolutely as soon as possible, right? And the best way to do that is to have transparency across everyone on the project, including your project teams, your stakeholders, the architect, the engineer, the specialty contractor, but also your accounting teams as well and your risk managers, because they can help mitigate many of these cost overruns and schedule overruns. And the great thing about this is the way that we've been doing this is actually evolving. The way that we're building projects, the way that we're managing costs on projects has been changing over the last several years, right? We went from a very analog paper checklists, Excel reports, or printouts on papers with literally red pencil and highlighters to identify out of line job costs to dates. Then we moved into this internet and mobile age, right, where we started to leverage a lot of technology in the cloud. We could get some analytics and some reporting that's a little bit better. People had more readily access to that information. But where we're at today is a place where we can actually get meaningful insight about what's happening on our job financially almost at a moment's notice. And why that's so important is the more in tune that we are to that and not waiting for that report that comes out a month later to come to us, is that we can react. We can put in place the stopgaps. We can plug the holes and make sure that if there is something that's happening on the job, if there is a change that's happening in the job, it's getting tracked and we can forecast it appropriately so that we can mitigate that risk. Now, it's still really hard for many of you, whether you're a contractor or an owner or a specialty trade contractor, to get the insights you need. And the reason for that is that we've adopted all of these patchwork systems and approaches over the course of years, which have led to disconnected people, lack of visibility, many disjointed systems and technologies, and most importantly, a significant disconnect between the field and the office, those who are running the project and those who are tracking the project in many cases. And so, one of the things that we really needed to do is make a change in our approach, really the ability to bring all those things together in a more open and flexible and connected manner, but also making sure that we have the security that we need to make sure that we're not losing data or sharing data where it shouldn't be shared. And this type of approach, where we leverage something that we call a platform to bring together these solutions so that you can run your job without actually having to mitigate the risk of not having the right information or not having access to something that you need when you need it, when the questions start to arise. So how do we go about connecting all these people, all this technology, the different projects, so that we can look at things at a portfolio level in a better way? Well, we need to do that by leveraging a platform, right? And that's where Procore comes in. And one of the things that we've done very, very well is we've built the foundation of it on a level of basically APIs, customized workflows, and the ability to collaborate, to get as many users into the system to contribute to that transparency and that visibility of what's actually happening on a project. And then we layered in all the systems that you also need to run your business, right? You're always going to need your ERP and your accounting platform, right? But we need that to plug into the tools that those in the field are using for project management and financial management, because the changes happen in the field. And those are the things that we need to track. And so our ability to bridge between when a drawing changes to a change order or a change event, and then push that into an accounting system via a forecast is incredibly important. So as we're looking at things on a regular basis, we understand what's happening on that project financially. Nobody wants to be surprised at the end of the project. And this can't happen unless those solutions and those tools can work together. Now, they don't just have to work together, but they have to work together well, right? None of us are IT people. Maybe some of you are IT folks, but for the most part, we just want things to work. We want to be able to turn them on. We want to make sure that the data is moving in the directions that we expect it to. We want to make sure that our accountants have the access to the information they need. We want to make sure that their project controllers have access to the information they need, and they should work in the space that is right for them. And it's one of the reasons that, specifically the team that I work on is put a lot of emphasis on making sure that we have integrations into the systems that each one of you uses on a daily basis to track your costs on a project, whether that be your ERP system, where we have over 20 different integrations, or other financial tools that might help you track things like lien waivers or expenses, right, on projects, all very applicable and very important for tracking project cost and being able to forecast appropriately. And most importantly, we want to make sure that we streamline the workflow between those departments and between those systems. So it's not just about making sure that there's a copy of the data there, but are we actually making your job a little bit easier? And are you actually able to collect the information that you need and get meaningful insight from it? Now, there's some significant advantages to having systems that are integrated in this way, right? A lot of accounting controls and oversight. The more information that they have and the more readily available it's being collected from the field where the action happens, the more oversight and the more controls that can be put in place. Now, a lot of people say more controls, that sounds horrible. But actually, if we're able to collect the information in more real time, the controls are less obtrusive, right? We reduce that double entry, reduce that project manager having to write contracts in one system and go and enter them in an accounting system somewhere else, or send that over to accounting so that people can get paid. And we don't want to, and I've experienced this myself, where people get overpaid because there was a change order that hadn't made it to accounting, which was actually reducing their contract value. And we've now actually paid them too much, right? We've all been in those kind of situations. And those are the type of controls that we all run around with our hair on fire trying to figure out, how do we get that check back? How do we recuperate that money? When a simple control could have eliminated that for us. And also it provides a lot of clarity on who's doing what, where the information should be coming from, and what their responsibilities are to help manage in that process. And by connecting these systems together, it gives us that increased visibility for everyone on the project, more transparency, which inherently reduces the risk, right? And the more people that can have visibility into it, the more eyes on it, and the more people that are looking at it, the more likely you are to catch things that potentially could be cost overruns in the long term. At the end of the day, though, this is all about improving your business, right? We want to make sure that you can basically beat your profit goals on projects, right? And our customers have said, from our RI report, 71% of them have said that Procore helps them meet and exceed those profit goals. That's because they have better control over the financials on those projects. They had better controls on the risks on those projects. They were able to track and have better transparency. You'll notice that 89% of them standardized the process. And you're going to hear David talk about how important it is to have process in place, and how a system like Procore can actually help you put those processes in place. You heard me mention transparency and improved communications. As people have been working more and more remotely, and as more people need to have visibility into projects, Procore helps with that. And overall, those financial tools improve the transparency between project staff and accounting. Now, we're here to help you build smarter, right? We want to improve that team performance. We want to give them something to measure against and something to track. We want to control costs, not just during the construction cycle, but from pre-con all the way to closeout and turnover in one place. And we want to help you make better decisions. What are the things you should focus on? What are the risks that you're willing to take, not just the ones that you have to deal with? And at the end of the day, we want you to win more bids and grow your business, because you can bid more confidently based on historical data, and you know which projects have performed, right? And so overall, our customers are telling us that we're helping them reduce those construction costs by mitigating those risks. And also, we're helping them increase the construction volume that they can go after, and the construction volume that they win with the same number of people that they have on board, because we can do it more efficiently. Now, you've heard me mention it a little bit before. There tends to be this great divide, right, between the project and accounting, right? A lot of people seem to think that they have the inability for these folks to communicate. And I don't think that's actually the case. I think that sometimes we're just speaking a little bit different language, and none of us actually have the information that we need. And so we get frustrated, right? But when you break down that barrier, or you bridge that divide, and you make sure that everybody's working off of the same set of information, the communication becomes that much better. The process becomes that much more clear, and everyone delivers a better project at the end of the day. And it's one of the reasons that I brought David on today, because we've had a lot of conversations about how to bridge this gap, how to remove the friction between accounting and project, and controls and audit in the construction process. And they're there for a reason. So I'm going to let him talk a little bit about some of the expertise he has about helping to bridge this gap for these two groups.
Hey, thanks, Chris. So just stepping back really quickly, RSM, the company that I've worked for 10 years, we are the 5th largest accounting firm nationwide. We have over 12,000 people who are dedicated to auditing, tax compliance, or some type of consultative service offering that's tied to financial matters. So I liked what Chris said. What we're all trying to do here is make money. And unfortunately, or fortunately, the road to knowing how much money we make it comes through accounting, whether you like it or not. And accounting is confined in many ways to the trial balance, or the boxes that we put transactions in, and how we report on those transactions. And so RSM has tons of professionals all throughout the country that do this. And I get to lead our risk consulting practice for the construction industry. And I get to focus on improving project control environments, auditing within project transaction environments. And I've gotten to see a lot of this, these conflicts between back office and the field. And I think what is really, really neat and what I'm excited to be a part of, both within my firm and working with guys like Chris, is to see how we're slowly starting to bring all this together into one unified place where we're all looking at the same information. So we're not arguing or trying to figure out that information that we don't have. We already have the information, and we're working collaboratively so that financial people, accounting people, tax people can bring their expertise to bear to share with the project management teams, and we can work together towards the goal of making more money on our projects. And I think it's an exciting time to be a part of that. And my firm has adopted that. And I've been, happy to be here for 10 years. And we jotted down some of those instances where we're seeing those conflicts. And, if you think about, so accountants or auditors, we think about controls in terms of their frequency, right? So something that happens daily, something that happens weekly, something that happens monthly, quarterly, annually. And so all of these points where we're entering data into systems, or accountants want to know that it's controlled, it is an interaction between accounting and the field. And so you see this before systems were being integrated. You saw this separation where accounting had some kind of information that maybe project management did or didn't, but project management needed to know it. And so a subcontractor asks a project manager a question. Well, if the project manager doesn't have direct access to the last invoice that got paid, or where that change order is in the workflow, or they have to go to accounting to ask those questions. And then accounting is probably wanting to know why those questions are being asked. And so you end up forcing this conversation about operational items that really is not focused on moving the project forward. It's more resolution or reaction to questions or inquiries. And what systems like Procore are able to do is start to push that data to the field so that we're not having to have those valueless conversations. Our conversations when we interact between accounting and ops are more focused on moving the project forward, being more innovative, and finding solutions to fix other areas of risk. Accountants are we're a unique breed, right? Accountants are very conservative, and we don't really like people asking about our accounting information that much, or we're naturally, a little bit defensive or protective. And so I love ops, and I've been focused on ops for the last 10 years of my career because it's so interesting to me. But you can extract value from accountants if you work together with them, because they see the project through a different lens. And I'll talk a little bit about that lens in the next slide. If you think about the journey of a cost, right? I look at this in 4 major buckets, and I think these 4 all have to align. You start the project with an estimate. That's your first financial impact, right? And that's set up in the way that the pre-con engineer or whoever wrote the initial estimate, how they set it up. And if they don't know what the limitations are of the cost accounting module, which is the last step in the journey, they may not set their estimate up in a way that it can be mapped directly to the cost codes that you actually have the ability to track through your ERP. And so I like thinking of the entire cycle of estimate connecting with the cost proposal that we actually put in front of our owner, and then connecting that cost proposal with the schedule of values that we actually produce to help us manage the financial aspects of the job on a monthly basis. And all of that has to tie into the cost accounting, code and subcode structure that's set up in your accounting system. And if you can connect all 4 of these items, it gives you the ability to have everybody, all those stakeholders that Chris talked about, even the owner, in some instances, if you give them access to systems like Procore, my audit teams have access to Procore on many accounts, and it helps us all be able to focus on true risk in the project, because we're not arguing about which bucket these costs go into, or what was the original basis of estimate and how did that convert into the schedule of values that we actually got, because you're mapping those things all the way through and you're automating the process of connecting the estimate to the proposal, to the SOV, to the cost. And it is a beautiful, harmonious balance when you find that. And I think Procore and others are working towards integrations to make this cycle completely automated, and we're very close. And in some instances, clients are doing an excellent job of connecting all these. In some instances, they still need to grow in this, and investing in technology and investing in that automation gives the field the flexibility to focus on the job and not worry about what accounting data they may or may not have. So the way that we see clients move through kind of this integration process, at least from my perspective, is you kind of have to start with the basics, right? So the easiest thing really to integrate is to push cost data back and forth, so that at least in the field, your team really is seeing the transaction activity as it's hitting. One of the challenges is when a PM or a field engineer looks at a cost report and they don't trust that the data is accurate. So integrating between what your accounting system actually shows as the number of transactions and the dollar of transactions with what the field sees is that first step. So subcontracts, general conditions, requirements, labor, burden, all of those basic costs. And then as you move through that life cycle, you move into things where you can start to get on the front end and start to integrate your contract values and your invoicing and your billing and your accounts receivable components, which, that's really where the rubber starts to meet the road, and you start to be able to finally connect in the field your revenues and your expenses. And then phase three, really the most mature model, is when you connect it all the way through to being able to look into the future, where you're projecting and you're managing your projections process within the same system that you're managing your revenue process and that you're managing your cost process. And so it's a process, and it takes time for the field to really be able to digest and understand how all of these things connect together. But systems like Procore and the financials integrations models that are being put together and packaged as a part of our clients' technology stacks, it is becoming a very, very effective way to get out of the business of having value-less conversations and focus on value conversations where we're moving jobs forward. I wanted to specifically focus on monthly projections, and I just want to touch on it briefly, but because of the significant impact that the projections process has in the financial accounting environment, these estimates, this monthly process of either rolling forward your budget or really thinking about it and really changing and projecting what you really expect your cost to be, and being honest with yourself and being transparent with your team and your client. As Chris mentioned, if you can be transparent in that monthly process, you can address risks faster, and you can work together as a cohesive team, even with your owners, to say, okay, we have this issue. It presents a financial risk to the project. How do we mitigate that risk together as a team? Because you're all working off the same financial information. And so that process needs to be very robust. And Procore has implemented a component of their financials module that actually allows you to document in a narrative form and through picking the calculation methodology how you went about doing your projections. And in a very robust auditing environment, we are going to ask, and we want to know what you used as the basis for coming up with how much sub cost you have left, how much materials you have left, how much labor you have left. Because nerdy accountants ask for those things. That's what we care about, because we want to know that that projection is accurate. Because if it's not, then our financials that we closed a month ago or a quarter ago were wrong because that job wasn't projected appropriately. So it's a very important area. And I just wanted to highlight that because this integration helps make that process easier. So just a couple of very quick case studies. We had a $150 million client that had a really seamless integration process, Viewpoint and Procore together. They worked together to include their owners, giving them access to Procore. And it was amazing watching how more efficiently the communications happened on this project because everybody knew the same information and they were transparent all the way through. So there were some profit centers that my client had in this deal that they never had to talk about with the owner because they were so transparent in providing access to Procore that it made the owner feel more comfortable that they were seeing real data that the contractor was using to manage the project. And I think they appreciated that so much that they, didn't press on some of the issues that typically become a conflict area. And this last one, this kind of takes it to the other end of the spectrum. The one I just explained was a client that really used this process effectively. This is a really large contractor that has lots of different subsidiaries. And unfortunately, they have so many different systems that they don't have a single source of truth or a single approach or a consistent methodology currently. And so you have a lot of disparity in the way that they're projecting, and the field is still very disconnected from the office. And so their solution to this, as we have been working with them and explaining how this disconnect is hurting their business, their solution is to pick a single source of truth, to pick a software that helps them connect estimate to proposal, to schedule of values, to cost codes. And I think when they achieve that, this business will increase significantly in its profitability and its ability to go out and win more deals. So go ahead, Chris. That was so much fun, buddy.
No, thanks, David. I appreciate it. And that's some really great information that you shared there. And I wanted to just bounce back to hit on two important things that you mentioned there. That projections process is so incredibly important to projects. I used to always tell our project managers as I was running operational excellence for GC was like, that's where you earn your money. The best project managers are the best at projecting cost. It's not to necessarily say like, hey, we're always going to hit the number. We're always going to finish it exactly where we set to, but where are we actually going to finish? And how are we going to get that, right? And having that transparency and that information, you talked about setting process. That is so incredibly important. And one of the values of a system like Procore is we help enforce that process. We can help make sure that you standardize the way that people are doing those projections. We can make sure that you can very easily see, hey, did somebody actually do a projection here? Or did they just let the system tell them how much is left to spend on this dollar amount? And capturing those notes, that important information about how that projection was done, couldn't agree with you more. It's one of the reasons that we have features like that in our forecasting tool is because we need that information. We need it for review by, the project executive team. We need it review by the accountant team and for later audit. When a project gets audited at the end, it's not always a bad thing, right? Especially if you've done a really good job of capturing all that information, having great examples of how you did that throughout the process, like you said, oftentimes opens up a conversation where they don't need to poke into every single detail because there's a level of trust and confidence that you were handling this with care all the way together. So we have a minute or two more, and I just wanted to ask you one question, David. As you've been working with all the customers that you've been working with, I'm sure the viewers today would love to hear, what are some of the biggest pitfalls that you see? What are some of the things that if they take today in 2 minutes, what should they be going and looking for in their systems?
Well, one thing that within the projections process, I find that there tends to be a lack of calculations or supporting documentation behind the projection. And so then you're kind of working on each other's words, right? And maybe we have a meeting and we get together in person and I tell you or convince you why my labor projection is accurate. There can be no substitute for actually opening up a spreadsheet and doing a calculation, or actually opening up, a commitment schedule out of your accounting system or through Procore to actually see the calculations, what transaction activity has happened, and then put pen to paper on what is coming. And I know that sounds terribly nerdy from an accountant to say that you should document more, but what I find is that the lack of documentation can be indicative of a lack of a real projection. And so I would encourage project executives and senior project managers and project managers to delegate real calculations to come up with what you project your estimated cost at completion to be, and review those as a part of your process, rather than everybody just getting together and talking about it. Put it down on paper, do a calculation, show the math, and not just because when I come behind you, it's going to make me feel better and I'm not going to write you up for it, but because it's going to make you think more critically about your project, and it's going to make the senior project managers and executives ask more intelligent questions about the projection, so that we all come to the realization that, hey, we might have a bust here and we got to figure out where we're going to fund that. So that would be my biggest takeaway at this point, Chris. And I know that's probably an accounting thing to say, but I apologize.
No worries. That's why we brought you here, David. Well, I just wanted to say thank you to everybody for joining us today. We appreciate how busy you all are. There's probably projects that you're managing right now that are going on. And so we appreciate you joining us to take the time to learn a little bit more about how these solutions can work together to really reduce the risk on your projects. Better forecasting, better cost management, better ability and transparency to see what's happening on the job from a cost perspective will make you a more profitable company. And that's one of the things that we want to make sure that we delivered to you today. So thank you very much for joining us. And please don't hesitate to reach out if you have any questions.
Thank you, Chris and David. We also want to thank all of our speakers for sharing their insight and experience with us. And to all of you, thank you so much for joining us today. I hope you're walking away with actionable steps to better manage costs and grow your business in 2021 and beyond. Procore is putting financials and cost management at the center of everything that we are working on, because it's at the center of everything you are working on. Our one measure of success is your success, and we truly value our partnership with you in building what's next. Well, that wraps up Procore's Cost Management Summit. If you'd like to find out more about Procore's financial management products, please visit Procore.com to schedule a demo.
So it's clear to me that the construction industry at a whole is in an era of significant change.
Technology is slowly taking over the world. The idea of tech is it makes life cheaper and easier and simpler, and it does things that a human can do, but it does it without sort of requiring human manpower.
There still is manual processes involved in our industry, but when we can do things through automation or through digital transformation to kind of take the busy work out of things, they can spend their time on a higher impact task.
I guess obviously the first leap was electrical tools, and then the next leap is electrifying the paperwork, and that's exactly what Procore really allows you to do.
Procore would be one of the first tools that I actually open up and leave open on my desktop when I'm working. That's how vital a tool it is in what I do.
Before, we were using Excel spreadsheets to kind of track defects and uploading photos into that spreadsheet and that sort of stuff, and it was so time consuming. Now it's all done on Procore. It's done right there and then in front of the client, and it's cut our workload in half.
Procore has given us the ability to communicate when we didn't have it before. We were all operating in our own heads or our own departments and not sharing that information globally.
We were a team. Procore is getting the team together to go in the same direction.
Whether it's site-based teams, whether it's office-based teams, Procore's been a huge part of that, I think, in bringing everybody together that has all the different roles and parts to play within the company.
You know, if you have an iPhone or an iPad or any tablet or any smartphone, if you're 5 or 50, it kind of speaks the same language to everybody. Or if you're Spanish or you speak English, it doesn't really matter. The technology has its own language. It's such an invaluable piece of equipment that we have.
There is some hesitation to technology with some people, out in the field. I think that hesitation has actually shrunk, and that's because people are seeing the value that it's bringing to what they're currently doing.
Having the entire set of drawings and specifications for the entire project contained, whether it be in my phone or in my tablet, I mean, I could never carry that amount of paper physically, you know, there's just no comparison.
If you don't change, you're still behind, so you have to change with the time. And right now, whoever is not on the computer, whoever is not on paperless, it looks like you're on the way out.